What if I told you that a single announcement in the Rose Garden just wiped out $6 trillion from the US stock market? Before Wednesday, Trump's tariffs were seen as a problem but a manageable one. Wall Street wasn't thrilled, economists were cautious, but the world kept spinning. Until it didn't, because what came next wasn't just a policy shift, it was economic and geopolitical mayhem. On Wednesday afternoon, in the Rose Garden, President Donald Trump dropped a bombshell. Starting Saturday, every U.S. trading partner would face 10% tariffs, with individual rates kicking in for 60 more countries just a week later. Overnight, the effective U.S. tariff rate would leap from 2.5% to over 20% levels we haven't seen in over a century. For context, even the Smoot-Hawley tariffs of 1930, which economists widely blame for deepening the Great Depression, didn't go this far. According to Trump, it was about prying open foreign markets, reshoring American jobs, and ending America's dependence on cheap imports. A full-blown economic reset, but the world didn't applaud it, retaliated. China fired back with 34% tariffs on all U.S. goods. The European Union threatened countermeasures. Even Canada and Mexico, America's closest neighbors, bristled. The result, a full-blown two-day market crash. The Nasdaq Composite dropped into bear market territory. The Dow Jones Industrial Average shed more than 3,900 points in just 48 hours. And over $6 trillion in market value disappeared. Investors panicked, bonds surged, stocks bled. Tech giants, who had been courted by Trump during his campaign and early second term, were hit the hardest. Why? Because when you can't predict future earnings, you can't price assets. And when pricing collapses, so does confidence. Even the formula used to calculate the tariffs came under fire. According to the Center for Strategic and International Studies, this approach was both unfair and inaccurate, punishing countries the U.S. imports heavily from, not necessarily those with unfair trade practices. Rough justice at best, blunt force at worst, the center wrote in a brutal analysis. And while markets melted, many Americans started asking a simple question: how will this hit my wallet? Retailers and small business owners warned that prices on imported goods, electronics, auto parts, even groceries could spike within weeks. Federal Reserve Chair Jerome Powell addressed the turmoil on Friday. He acknowledged the tariffs would likely dent economic growth and boost inflation, a double blow to an already fragile post-pandemic economy. Powell stated that the Fed would remain in a holding pattern, disappointing investors hoping for a rate cut to stabilize the markets. And then came the gut punch from Wharton School professor Jerome Siegel, who didn't mince words on CNBC. "I think this is the biggest policy mistake in 95 years, Siegel declared. "This is a self-inflicted wound. It's an unforced error, it didn't have to happen." Trump also teased progress on a potential TikTok deal with China, claiming it could help ease tensions. And in true Trump fashion, he signed off with, "Only the weak will fail." So, what do you think? Drop your thoughts in the comments. Stay curious, stay informed.